Hello, and welcome to the Motor Trade Radio podcast, powered by Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the car retailing sector, from factory to forecourt.
Well, we've got a packed podcast today, and we won't do our normal weather update because God knows what it's going to be like at the weekend when you're listening to this on Saturday morning or whenever you're listening to it. So I think we'll get straight in, do you think, Curtis, into this week's headlines?
Yeah, I'm hoping the weather will be good this weekend because I'm going on holiday.
I'm hoping it's not this
in the UK.
I'm going at level 1 sailing.
Yes,
A lesson this weekend, and yeah, I don't want to be capsizing too much, to be fair, but we'll more about that next week if I survive. Maybe we'll
good luck. Yeah. But as you say, we've got a packed show this week, haven't we?
We have, yeah. We've got a bit of an update on something as well, and a midway snippet from an interview from earlier in the week, haven't we?
We have indeed, yes, because we caught up with, finally, Ash Passant and Danny Minshall from Greenhous Group. And this has been a kind of work in progress for quite a while, because I know you know the guys really, really well. And, we've been wanting to get them on the podcast for a long time. And we finally sat down with them last week, didn't we?
We did, yeah. But they have, I mean, you get it from the full interview. They've spent quite a bit of time in China over the last sort of 18 months, and quite a lot going on as a business.
Yeah, and in fact, they made 2 trips to China within a month, didn't they? They were saying. So we've got an extract from the interview that we did with them, really sort of focusing in on that sort of fact-finding mission, because they do represent multi-franchise brands, but they've got several new entrant Chinese brands as well that they're representing.
Yeah, exactly. So as I say, the full interview is on your podcast feed. At the halfway break, we'll share an extract from the full interview. But as Curtis said there, Greenhous being ranked 9th in the AM100 in the UK. They've in recent years to 12 manufacturers now, so including 7 several new entrants from China. But we'll get onto that at the halfway point. But we've got a bit of an update on last week's story that we covered from Aon.
We have indeed, yes. Our thanks to John Wakefield, MD of Aon, and he is a regular listener. In fact, Phil, he listens to us when he's out running. So John, if you're listening today, hope you're powering through. And he got in touch to thank us for the coverage last week, and he pointed out that I only skimmed the surface of what the brand's new Great 8 package covers. So here's a bit more detail on what must be one of the most comprehensive packages available on new cars in the UK. So this Great 8 covers 8 years, 100,000 mile vehicle warranty, 8 years, 125,000 mile battery warranty, 8 years servicing, 8 years roadside assistance, and MOT testing fees up to the 8th year from first registration. So in my excitement to talk about the 8-year warranty, I didn't cover all of them. So apologies for that, John. Hopefully we've got it all in place now. And he also shared that the brand's volume aspirations are 40,000 units by the end of the decade, and not the 100,000 that I misread. So good to get that straight.
You managed to increase his target objective on the
Yes, I did. So hopefully that wasn't picked up in China. So
no, and I think crucially this Great 8, it stays with the car, isn't it? That was a crucial point with John, that the 8-year servicing and roadside and MOT and everything stays with the vehicle no matter the owner. So the second and third owners within that 8-year period still get that benefit as well. So that's quite a significant, crucial point on that one.
It is, yeah, and that all goes live with the Aon V, which is their mid-size EV SUV, which has just gone on sale. And in case you haven't heard it, we did do a special Aon launch episode with John last November. So we'll put a link to that in the newsletter because it's definitely worth checking out their aspirations and their plans for the UK.
Yeah, and for myself, we've got a bit of a brief update just for anybody that follows me on the social media channels. We've got, you'd be aware that I chair the Vehicle Remarketing Association. We have our AGM coming up on the 2nd of July. It's always at BCA Perry Bar where we hold our AGM. It's an open meeting following the update on the AGM. A great lineup of speakers. We've got Kevin and Omar coming in from Alvarez and Marcel with Fraser Brown. You may see him in the social channels from Motorvise. Will be giving us his view in what he's seeing in the market, particularly on electric vehicles. And Graham Filmer, who is at the Rocket Associates, will then discuss some of the motor finance landscape happening across the sector. So really looking forward to this one. It's always a well-attended event, is the AGM.
Yeah, that sounds a really good one, Phil. And Graham's an old friend of mine, so he's always got a lot of interesting insights, certainly into that sort of finance side of the sector. So it'd be interesting to see what he's talking about.
If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers, and decision makers on one of our Motor Trade Radio supplier special episodes, then get in touch at motortraderadio@yahoo.com.
Companies already featured in our supplier specials include Autoglim Lifeshine, Impel, Prospecting Dynamics, iVendi, ETT, and Jig Car. You can find them all in your podcast feed with our recent OEM specials with new EV brands, including Verizon, Changan, and of course Ion. And we also caught up recently with Suzuki. So if you would like us to profile your business, then just message us at motortraderadio@yahoo.com.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
Headlines this week come from AM Car Dealer, the Financial Times, and Fleet News. We have a show of two halves this week. So in the first half, we'll look at the SMMT's new car registration figures for May, which actually grew by 7% thanks to increased retail activity. Philip's got the latest sales figures from the main European markets and the US. We've got the latest van figures as well, and an overview of May's used car trends from Cazoo, plus a surprising trend showing used cars being snapped up for the fleet sector. Then, in the second half, we have a special focus on Chinese brands, starting with that extract from our chat with Ash and Danny from Greenhous, talking about their recent trips to China, followed by news that Chery has signed a deal with Nissan to manufacture in the UK from next year. New research from Carblah shows how Chinese brands are outpunching established rivals for customer experience. And we'll finish with how Group 1 is turning to Geely after axing its JLR sites.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
So as Curtis has said there, we'll head over to AM Online, but we'll talk a little bit broader about the May new car registration figures. And as Curtis said there, the private buyers in EVs drive the strongest May since 2019, saying that the sharp rise in private buyers' demand and continued growth with EV registrations helped drive the UK's new car market to its strongest May since 2019. And this is, as Curtis alluded to there, a 7.1% increase year on year to 160,662 in the month of May there. So great result there, isn't it?
It is. It's very positive. It's very encouraging and worth looking at private registrations, because they were actually up 17.2% to 65,781 units, really outpacing fleet growth, because we're so used to seeing month on month fleet accelerating beyond retail, but fleet only grew by 1.8% over the course of May. As a result, the private market increased its share of total registrations from 37.4% to 40.9%. And interesting that the SMMT is attributing the growth to these increasingly competitive offers that we're seeing in the market, and expanding model choice, with the number of models available to UK buyers. It's actually increased by 6.4%, and that includes a 25.6% increase in battery electric vehicles offering since the start of the year. So we can see why there's such big demand, because there's an awful lot of activity around incentives, customer incentives on the retail side for these new cars.
And it was a point that we did touch on with Ash and Danny in the full interview. If you do have a listen back to that from earlier on in the week, that alluded to the fact that we have seen erosion from used car buyers into the new car market. So again, the used car buyer, although we have got a story, we'll talk about that later, but they tend to be private that buy the used cars, and Greenhous has seen an erosion from used car buyers into their new car market in some of their stats. So that kind of supports on the ground what is actually happening behind these headline figures.
Yeah, definitely. And that's something that Robert Forrester from Virtue Motors was talking to us about a couple of weeks ago as well. So we're definitely seeing that trend in the market, whereby traditional used car buyers are looking at some of these new car offers because they're so tempting. They're so affordable, aren't they?
They are. And in terms of fuel type shifts, and for the month of May, the BEVs there, 34.2% increase to 43,931, taking a market share of 27.3%. Hybrid electric vehicles, just a marginal increase of 1.8% up to 20,719, taking a 12.9% market share. Plug-in hybrid taking an increase of 23.9% for the month, up to 22,167, a 13.8% market share. Petrol, a fall, 7.1% drop in volume for petrol, down to 66,223, and that's fallen to a 41.2% market share from 47.5% in the same time last year. And diesel, a marginal fall at 2.2% change, down to 7,622. You never thought you'd hear that kind of number, would you, for diesel? Taking a 4.7% market share. But it does allude in the story that, BEV is still a big gap away from the ZEV mandate threshold with a year to date, although we did see a growth of 24.3%, but market share still around that sort of 23.9%. So fairly low against the 34% expected for 2026 there, Curtis.
Yeah, and just to finish off, looking at some of the year-to-date figures in the round. So total registrations for the year-to-date are up 8.7% to just over 924,000 units, well, in fact, nearly 925,000 units, and that's up from 851,000 units this time last year. And as part of that, private retail sales are up 12.7%, fleet is up 6%, and business, which is those small business sales, is up 11%. And just to finish off on fuel types, battery electric vehicles are up 24% in the year to date, hybrids are up 7.2%, plug-in hybrids are up 42%, so big growth there, whilst, as you say, petrol's down 2.5% and diesel's down 7.4%.
And just before we move on to the LCV registrations, just to look at the wider European and the US markets, France 3.7% year-on-year increase up to 128,500. Germany, near enough level at a 0.1% increase to 239,400. Italy, slightly better at a 7.6% increase to 150,100. And Spain, down 0.8%, down to 111,900. So overall, when you compare us with those four European markets, the UK has performed quite well. And
Yeah,
in fact, US is down 0.8%, down to 1.5 million. So I think all in all, we've performed quite well there.
yeah, and US is interesting, isn't it? Because we've been tracking this for a couple of months now, and their month-on-month sales are suffering, aren't they? And as a result of fuel prices going up, the price of gasoline in the States, that's really starting to hit sales.
It is, yeah. So I think you've got some van figures, haven't you?
We have, yeah. So these are fresh off the internet. So I've got the press release here from the SMMT. So the new LCV market rose by 3.6% in May, with 23,620 units sold, and that covers vans, pickups, and 4x4s. And the performance marks a second successive month of growth for the first time since 2024. That's an awful long time, isn't it? Because we've obviously been tracking the van market this year, and it has been struggling. But it's good to see we're now seeing some month-on-month growth. So overall growth was driven by increased demand for large vans, with registrations up 18.6% to just over 17,000 units, and a market share of 74% compared with 64% share in May last year. So some encouraging figures here from the new LCV sector.
There is definitely. And sticking with AM online and heading over to the next story there, and the headline is older used cars drive price growth in May. And this is on the back of used car prices and stock levels remained stable in May, while demand for older vehicles and EVs continued to grow. And this is from the latest data from Cazoo, and this is their market view into that I know you're involved with, Curtis.
Yes, yeah. So I did work with the team on the data for this, and some notable trends this month. So as you say, used car prices and stock levels remain stable. The average advertised used car price on Cazoo was £17,655. That was down just £23 month on month, but was actually up 2.8% year on year. And prices across franchised and independent dealers were largely unchanged month on month at £22,893 for franchise dealers and £14,274 for independent dealers, whilst car supermarkets recorded a 1% decline to £16,241. But the strongest price growth continued to come from older cars. So cars aged over 10 years rose by 1.3% month on month to an average of £7,637, representing a year-on-year increase of, well, just shy of 11%. And interesting, this again sort of reflects some of the conversation we had with Robert Forrester a couple of weeks ago, where Virtue as a group is actively targeting those older vehicles and stocking and selling them.
Yeah, definitely, and it kind of reflects the economy and the state of the market in general, doesn't it? That we're starting to see that price rise at that back end there. But yeah, as you say there, and there is a quote in the story there from Luce Tubby, who's the chief marketing officer at Cazoo, saying that May's used car market was stable with buyer demand, ensuring prices remained firm. Older profile cars continue to attract the attention of buyers, undoubtedly focused on affordability, with big name franchise groups now increasing in stocking them. So, reflecting that those larger groups, supermarkets, are now moving into that older profile of vehicle to reflect the demand of the market.
So heading over to Fleet News for the last story in this half, and the headline there is used vehicles being adopted more by fleets. So this is based on research from the Arval Mobility Observatory Barometer, and it is found that more than half of UK fleets are deploying used cars and vans as part of their fleet makeup. And the research shows that 58% of fleets are operating a proportion of used cars and vans, and that's up from 52% in 2025. So very much a growing trend there, and a further 31% of fleets are planning to add more used vehicles in the next 3 years, and that's actually up from 27% in 2025. And there's a comment here from John Peters, who's the head of Arval Mobility Observatory, who says the shortage of new cars and vans during the pandemic prompted many fleets to consider pre-owned options and incorporating them into long-term acquisition strategies has subsequently become recognised as an effective option. And it goes on to say this is enabled by the improved durability and quality of today's cars and vans, with modern designs maintaining safety, operational cost effectiveness, and good overall cosmetic condition. So this is really pinpointing quite an interesting trend, isn't it? That used cars are being snapped up by fleets in a way that not that many years ago they wouldn't have considered putting used cars onto their fleets.
No, and it is a trend, and it's quite nicely summed up at the end of the story there, saying that this may be a trend that can be tracked back to the pandemic, when right-hand drive vehicle availability was generally poorer, leading more UK businesses to consider used alternatives. And we talk about used EV transitions and the push from the Z mandate, don't we? And that a choice of vehicles in the new car market. And these fleet operators have got to run a business that satisfies the demand of their customers necessarily. It doesn't always match with the availability of new cars.
Yeah, and it does raise the question of where are they being sourced from? Because there's only a limited number of used cars out there, and obviously dealers are in the market to stock and source used vehicles for their forecourts, and there is this potential competition now from fleets looking for vehicles as well.
But we'll be back after the break, after this short extract and interview there with Greenhous Group's Ash Passant and Danny Minshall, and the rest of the headlines after this.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Cazoo.
I mean, great to have you both on, and I think it's very timely, as we know. So I mean, let's start off with that trip to China. I mean, as a group, that you've really embraced the new entrants, and obviously predominantly by Chinese brands. And I mean, starting with yourself, Ash, on this one. I mean, can you give us some of your impressions of what you've been seeing in your visits to China recently?
Yeah, so I guess we've been twice, as Danny said, we've been twice in the last 40 days or so. And first trip out there was with our hosts, Geely, our probably most recent Chinese partner. And that was really to see the motor show, to see Geely's product that's coming down the track, including a couple of their subsidiary brands, such as Zeekr. I think, as anybody who will say who's been over to China and who's seen the motor show, I think it was Danny and I's third motor show. What you can never take for granted is just the sheer scale, whether that be the amount of products on show, the amount of brands on show, the ever cycling change of product. You never see the same product twice. It doesn't feel like, and the speed of innovation. They are working 5 years ahead of what we're seeing at the moment, probably 10 years ahead. We only see what they want us to see. But yeah, that scale, until you've seen it with your own eyes, you just cannot fathom it.
So you managed to get the steps in presume you were
We de-
hesitant.
we definitely managed to get the steps in. I think that somebody told us that the show, from the first show that we've been to, it's tripled in size in 3 years. I think me and Danny walked about 40,000 steps on the press day, and I still think we probably missed a couple of the halls. So yeah, there's plenty to see. You could easily do 3 or 4 days at the show alone.
And Danny, I mean, what were your impressions of it? I mean, obviously, you know, you and Ash have been, say, going over there and you know, looking at what's coming in the UK, what's already here in the UK. I mean, you must be amazed in terms of, you know, that size, that scale. And as Ash has pointed out, you know, 5 years, and everybody talks about, you know, China being 5 years ahead in terms of advanced technology, innovation. What was your impression of that?
Yeah, I mean, my thoughts are similar to Ash's. The scale is phenomenal. The products that they're bringing to market are incredible. I mean, just last week we were being driven around Shanghai in an autonomous car, um, which you just didn't believe would be the case just a short few years ago. The other thing is there's brands even that we haven't heard of, and we've been to China sort of 4 times in the last couple of years, and every time you go back, you find another brand that you go, well, who are they? Who's the parent company? When are they coming? Are they coming? Would it work if they did come? So it's surprising us every time we go, and we feel like that, we've been and lived it and seen it, but I think we've just seen a thimble full of what they've got to offer. I really do.
I mean, what a great chat it was with Ash and Danny there. And as we said, right, don't do have a listen of the full interview there. And we talk about the Chinese market, their adoption of some of these Chinese brands, and talk through what they're seeing in the market today and what they're expecting to see for the remainder of the year. But it was a great chat, wasn't it, Curtis?
It really was, and it was very timely. They were fresh back from that trip to China, and and as a group, they really have embraced the new Chinese entrant brands, and speaking with some authority on what they saw out there. Also the product cycles, because very much that 5-year gap between what's being delivered over there and what we're seeing here. So, and that insight into the pipeline, the product pipelines that they're seeing. So, yeah, do check out the full interview because they do cover off a lot about the Chinese brands as well as what they're seeing in the market generally. So, good interview, good chat with the guys.
And it's as if somebody set these headlines up intentionally. So that was segue us nicely into the Financial Times that broke the headline this week, and majority of the trade media's then swiftly followed. But this is that Nissan signs deal with China's Chery for Sunderland car production. So saying that the future of UK's largest car plant was thrown into doubt by massive restructuring of the Japanese group. But we know that Sunderland has been running at about a 50% capacity, and obviously Nissan throughout that Brexit period was threatening to exit the UK, weren't they? And they continue to put that challenge into the UK government.
Yeah, and I still don't think we got to the bottom of the deal that was done between Theresa May and Nissan. Maybe we'll never know, but this is, this really is welcome news for firstly Sunderland, certainly Nissan, but also Chery. So the FT, as you say, they broke the story and they revealed that Nissan has signed a deal with Chery to manufacture the group's vehicles at its Sunderland facility in a move that will secure the long-term future of the plant in Sunderland. And it goes on to say that under a non-binding memorandum of understanding, which is curious because you'd think it'd be a bit more binding than this, but it was announced on Wednesday that Nissan will aim to start producing Chery vehicles at Sunderland from next year, which again just shows that rapid turnaround. I mean, when the Chinese brands commit to something, they don't hang around. So if we're talking about new Chery vehicles, we don't know if it's Chery, a Motor, or Jaku, or a combination of all three. But from next year, so it is perfectly feasible that we'll be seeing, I don't know, Jaku 7s rolling off the production line at Sunderland next year.
Could be the Lepus brand as well, couldn't it? With that makeup. So I think this could be another one. I mean, you never know with the Chinese manufacturers. They could create a whole new brand that comes out of the UK Sunderland plant. But I think you said when we were chatting about this earlier that that the volume of the JQ 7. Which again has done really well in the year to date and the March figures in the UK. It would make sense to make that vehicle here in the UK, wouldn't it, with the demand that it seems to be getting by the UK market today?
Yes, yeah, and it all fits in with the made in Europe as well, doesn't it? Because if Chery is manufacturing cars in Sunderland, then it means it can export to other European markets and avoid some of those tariffs that are being charged on the Chinese, the cars that are built and exported from China.
Yeah, I think there's just two things with this, really. One, it demonstrates that the Chinese manufacturers do try and remain asset light, taking over existing or merging in with existing manufacturing plants without actually building fully from ground up plants outside of their home market. But two, really shows the speed in which they can operate. As to say, opening a conversation here in the UK in the month of June to talking already that they'll have vehicles coming out of that plant in 2027 when we're already halfway through 2026 kind of shows the speed that these Chinese manufacturers can operate to make these kind of things happen. So this could be the first of a few things, couldn't it, happening in the future in that world if others do follow.
Yeah, definitely, and it does follow hot on the heels of there was a news story during the week about Shanghai Automotive, the owners of MG, looking to set up car manufacturing in Spain, and again, building cars locally for the European market, and it's not going to be long before we do see a number of these plants in across Europe, because the Chinese are just so good at doing this. They're very, very focused, and if, as you say, they can collaborate with someone, they will. If they can't, they'll build plants themselves. As indeed the Korean brands did.
Yeah, and the last couple of stories quickly. We've got Chinese brands lead Carblah customer experience ranking, that Chinese car brands are delivering a better customer experience than many established rivals, according to the new industry index that puts Omoda, Chery and Jaku ahead of mainstream and premium competitors. And this is from the latest Carblah Customer Experience Index, ranked, as I say there, Omoda as the UK's highest performing brand for customer experience, ahead of sister brands Chery and Jaku, with Leapmotor and GWN completing in the top 5 there. So, this is fascinating new data there from Carblah.
Yeah, so Chinese brands occupying 10 of the top 10 places in the overall rankings. And the piece goes on to say that the results are based on analysis of almost 1 million customer reviews covering sales, service, and ownership experiences across retailers representing 54 car brands. So pretty comprehensive, with the data suggesting newer market entrants are winning customers by offering a simpler and more consistent retail experience at a time when consumer expectations are changing rapidly.
Yeah, and we'll try and keep bringing you some of the index data from Carblah. Just as a final comment in the story from Michael Yeats, who's the managing director and co-founder of Carblah, said that the data is unambiguous. Customer experience drives trust, and trust drives margin. The brands that simplify the journey and remove friction are the ones outperforming the market. Customer experience is delivered by retailers, not OEMs. and some OEMs will be disappointed in the networks representing them. So yeah, it's an interesting final quote there in the story from Carblah.
And final story of the week comes from Car Dealer, and the headline there is the retailer Group 1 is currently making significant changes to its UK operations following last year's bombshell decision to axe all of its JLR sites. And it has been announced within this Car Dealer story that the void will be filled, at least in part, by Chinese carmaker Geely, after the two firms reached terms on a new franchise agreement. And it goes on to say that the move will see Group 1 open 3 dealerships across the country, beginning with the launch of its first Geely store in Peterborough this month.
Yeah, and it's, I mean, it just shows one, the supporting what we were just talking earlier from the Carblah, the customer experience, and then obviously alongside some of the performance in the new car registrations from these Chinese manufacturers, that the retailers are deciding with their feet, aren't they, for sure there. And there is a comment in here that's confirming the news. Daniel McHenry, who's the Group 1 UK CEO, said that they're delighted to be opening their first Geely store in Peterborough and to be partnering with Geely Auto at such an exciting point in the UK expansion, saying that Geely's product range, advanced technology and future-focused approach to mobility brings their customers a compelling range of electric and plug-in hybrid vehicles. And I think the key point there is plug-in hybrid vehicles, which leads to that growth that we talked about right at the start of today, didn't we, Chris?
Yeah, and the story goes on to say that this particular news story, news of the deal comes just days after Group 1 agreed to sell 3 of its former JLR sites to Lithia. So it's really showing how Group 1 is reshuffling its pack there and looking at new partners in the certainly in the shape of Geely. And Geely have already partnered with the likes of Arnold Clark, Glyn Hopkin, Greenhous, Virtue and Minshall. So some big names there that they've signed up.
Yeah, for definite. So hopefully we've managed to cover all the key headlines there, and I think you had to be quite selective this week, Curtis, in which headlines we talked about. I think that one with in the FT around the Sunderland plant is crucial for the 6,000 employees that operate there, and the reliance that Sunderland has on the Nissan plant up in Sunderland. So it's a big move. I mean, alongside the Chinese manufacturers willing to do that in the UK, but securing the jobs for that area is crucial. Obviously, we talk about the interview there with Ash and Danny. It is on your podcast feed. Do have a listen to it. We do cover quite a bit with Ash and Danny from, like we say, from their experience from the visits to China that they've done quite a bit of in the last 18 months, 2 years, all the way through to the group's performance. And we touch on that new car demand, fleet share, and obviously that used car erosion and the makeup of the profile of how that's starting to shift there. So do have a listen to that on your podcast feed.
But that's all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Cazoo.